fundsupermart.com.
Asian high-yield bonds have delivered mixed performance so far. With us today is Ms. Wai Mei Leong, Fund Manager of Asia High-Yield and Philippines USD bond funds at Eastspring Investments, who will share with us her views on Asia high-yield bonds. Hi, Ms. Leong. Thanks for joining us today. What do you think of Asia high-yield bonds and US high-yield bonds in 2015? Which one is more attractive to investors?
Right. In general, Eastspring actually does a survey among investors about their preference between income products and growth products. And the recent survey in September actually still shows that investors still want a component of income products in their portfolio. So for this reason, we think that whether it's US or Asia, there's still going to be demand for high yield products because of its income stream. Yeah. As for which markets is more attractive, obviously, right now the credit spread between Asia and the US is fairly sizable, and because of that, logically it would seem that Asia is more attractive than the US.
What are your views on the credits of Asian companies? Has there been any major change, and how is it affecting Asia high-yield bonds?
Right. In the last 2 years, we've observed that leverage has actually increased in Asian companies. Having said that, I think we still think it's at manageable levels. And if you look at the ratios for net debt to EBITDA for high-yield companies in Asia, it's about 3 times. It's still slightly lower than US high-yield companies, which is about 3.5 times. So for that reason, we're still comfortable. Obviously, it's something that warrants watching.
As expectation for the Fed's rate hike increases, how will this affect the prospects of Asia high-yield bonds?
Okay, the traditional thinking for high yield is that it's very correlated to equities. Hence, in an economic expansion phase in the economy, which is also kind of signaled by a rate rise, actually Asian or US high yield should actually do better because credit spreads will compress. And the rise in interest rates, which actually will probably depress the price of bonds on the interest rate side, will actually be offset by the credit spread compression.